do. Again, benchmarking of intergroup services, and the last and the foremost is the global minimum tax. All these issues will culminate for global minimum tax. So that's why it's very important for any group which is getting impacted by the threshold that they have to proactively ensure that their transfer pricing policies are in line. So as the last step, what PKF right here, what PKF as a group can assist you with, that whether it's all these countries and on a global basis, right? Because PKF is operating into different countries and different regions. We can first of all assist you in undertaking a detailed diagnostic review of your transactions, business models, and etc., and suggesting you the appropriate arm's length price analysis. This is related to value chain alignment, which is gaining a lot of importance now in the light of minimum tax. Again, the second assistance which we can give you, not only from a local country but from a regional perspective or even from a global perspective, that conducting detailed and proper analysis for all your transactions. So if you see the length and the breadth is huge, whether it's from services, distribution, manufacturing, royalties, trademark, etc. Assistance against towards preparation of the documentation. The value chain analysis is something which we would like to lay emphasis for all of you, because for every company, having your own business model and operations is something which is very crucial at this stage. And obviously, those would be for transfer pricing audits and scrutinies and advanced pricing agreements. So these are some of the core elements of transfer pricing which PKF can assist you in terms of achieving the tax and transfer pricing certainty. So that with that, we would like to conclude, but now we would like to open, the window to all of you for any questions which you have for myself, Ai Chen, or Becky. And we would be very happy to take any questions which you may have on any of the country or any general topic or minimum tax or anything. Please, feel free to put any question which you have in the chat box.
There's one questions on the arm's length quantum of debt from an Australian transfer pricing perspective. So on that particular aspect, we are expect to receive further guidance from the ATO to determine step-by-steps to be undertaken for the analysis for the quantum of debt. However, some key factors that we expect to see in the guidance may include the credit rating of the borrower, the debt obligations, the history of debt obligations of the borrower, the availabilities of securities or parental guarantee, and also the availability of the comparable debts. So those are the key factors that taxpayers can consider while waiting for further guidance from the ATO.
And I think just to add on what related to this question only, what you just explained very clearly, Becky. So anyone from a local standpoint, now the regulations across APAC are saying that an interest-free intercompany loan or a financing arrangement would not sail through. So this is something which companies operating in the APAC region might have to take into consideration, that an interest-free kind of arrangement, whether it's borrowing or lending of funds, might be difficult to be explained to the tax authorities. Of course, there are certain safe harbor rules, which are giving some comfort to the taxpayer, whether what kind of interest approach you should apply. But the bottom line or the key takeaway related to this question itself would be, not in the Australian context, but on a general context, that their interest-free loan arrangement, or whether it's any kind of corporate guarantee or whatever, might be difficult now in terms of overall transfer pricing certainty. So this is just one small point which I just wanted to mention to you on a general basis. Yeah. Any other questions which the group might have? I think, Ai Chen, there's one question for you. Yeah.
Hi. Okay. So the question comes from Jennifer Wong. So currently enjoying principal incentive at a zero tax rate. We are the subsidiary of the MNE that qualify for GMT. Does the tax to be computed at domestic entity at 15%? So as you can see here, Malaysian adaptations at domestic level, in terms of domestic level top up at 15%, then yes, yeah. In terms of the group level, it's yet to be, there's no clear position at the moment. Yeah.
Any other questions from anyone? I think we do have a couple of minutes left. Anyone has any other further questions on minimum tax from anyone?
Yes, there's one question from Malaysia's perspective as well.
Okay. So I have one. Yeah. So yeah. Then go ahead, Ai Chen.
So, manufacturing Okay, so when you look at the, you have a company based in Singapore, and you would like to contract manufacturing with a plant in Malaysia, and what will be the minimum markup percentage to avoid any exposure from the Malaysian tax authority? So as far as concerned, you need to perform the FAR and you got the right characterizations. And from there, you'll be looking at the appropriate methodology to adopt. So as long as, let's say, if you are looking at we don't have a safe harbor rule in Malaysia. So if you are adopting the TMMM method, you got to ensure that you are within the same range. You are within the arm's length range. Yeah. Otherwise, we'll be looking at you are contract manufacturing. Yeah. So there's other methodology that you will need to adopt. So upon on that adaptations, yeah, that's how the tax authority will be looking at.
Yeah, and just to add on to Linda, because this in your example or the question includes both Singapore and so yeah, from a minimum markup perspective, because at the end of the day, transfer pricing would have to be taken into consideration from both the border sides, whether it's from Singapore and Malaysia. Because in your case, if the company based in Singapore would like to have a contract, manufacturing with a plant, so from both sides, there wouldn't be possibility to give a minimum markup. The reason primarily is based on the fact that what kind of manufacturing activities are being undertaken and what is the role of the entity in the value chain. That's why, which I was mentioning earlier, the value chain alignment will be important here. So on the basis of that only, we can advise what could be the appropriate markup. So the bottom line is that the markup will depend upon various factors, primarily what kind of activities and what kind of functions the entities are performing. But for your comfort is that whatever the results comes, if your markup is falling within the range, then you are absolutely compliant with the arm's length principle. So that's the small point from a Singapore side also which I wanted to let you know. Any further questions from anyone? So I think we are, at the end of the webinar. So if anyone has any other further questions, please reach out to either of us. We can definitely come back to you, and we can definitely take up all the questions which you have. Yeah. So yeah, if there were no other further questions, so yeah, back to you, Fiona, for concluding remarks, if any.
Okay. Well, oops. Okay, thank you everyone for joining. A big thank you as well to our 3 presenters, Becky, Sahil, and Ai Chen. Great job. So a lot of people are asking if they will get the slides or the recording, and everyone who registered will get a copy of the recording. So don't worry about that. You can access the information after this session as well. And if you have any questions, the webinar invite had contact details for each of our presenters, so feel free to reach out via email as well. And have a great day, everybody.
Thank you, everyone.
Thank you.